In today's complex world, financial firms face constant pressure to manage data, ensure compliance, and scale effectively. We are AutoRek, a global leader in reconciliation and data control automation solutions. Trusted by major financial institutions, we help the world's leading organizations gain clarity and control over complex operations. From our offices in Glasgow, Edinburgh, London, and New York, we empower financial services firms to deliver accuracy, transparency, and resilience across their operations. AutoRek is an end-to-end financial controls platform designed for high-volume environments. We ingest data and reconcile any security, currency, derivative, or crypto asset, automating reporting while ensuring data integrity through flexible workflows and real-time insights. Built for complexity and scale, AutoRek helps you meet evolving operational and regulatory demands with confidence. Whether you're centralizing operations across multiple entities or transforming legacy processes, we help you maintain control, accuracy, and compliance. Our clients experience a reduction in manual effort by up to 90%, enhance their operational efficiency, and improve compliance, all while achieving faster results. AutoRek isn't just another reconciliation tool. It's the essential control layer powering the future of financial operations. And we work as true partners, from implementation to optimization. Because when accuracy counts, be sure. Visit autorek.com or reach out to our team to learn more.
Hello, and thank you for joining NICSA's Webinar Wednesday. My name is Natasha Bush-Postel, and I am the Webinar Program Manager. And on behalf of NICSA, I'd like to welcome you to today's program. Today's webinar is titled Reimagining Reconciliation, AI Regulation, and Capital Markets Transformation. This program is sponsored by AutoRek. We thank them for their support and for bringing this valuable content to our members. Before we begin, I have a few housekeeping items to address. If you need assistance during our program, please send an email to info@nicsa.org. To avoid connectivity issues, please make sure your VPN is disconnected during the session. If you have questions for our panelists, they can be typed into the Q&A box found at the bottom of your screen throughout the session. NICSA is pleased to offer one continuing education credit for today's webinar. To receive CPE credit for today's program, please make note of the 3 verification codes posted in the chat feature throughout the session. After the session, you will receive a separate email featuring a survey link. Enter the 3 verification codes into the survey to receive a certificate, which can be used to redeem CPE credit with NASPA and IWI. Lastly, this program, its content, and its speakers are off the record. Key takeaways can be gathered, but we ask that no one person or firm is attributed with specific quotes. Members of the press can be contacted at info@nicsa.org for any follow-up information. Thank you and enjoy today's program. At this time, I will turn it over to today's moderator, Carrie Carruthers. Carrie is the Senior Anti-Money Laundering Officer at American Century Investments. Carrie?
Thank you, Natasha. Welcome, everyone. As Natasha stated, I'm with American Century Investments. I've been here for 26 years, and this topic today not only is it interesting to me as technology advances, I find it very fascinating, and also in my job, very scary. So very happy to moderate this session today. We'll have the opportunity to hear insights from peers across a range of industries. They have provided guidance. They will be providing guidance on navigating the rapidly changing landscape of financial reconciliation, addressing increased data volume and fragmentation, evolving regulatory requirements, and the integration of emerging AI technologies. As organizations seek to improve operational efficiencies, they face challenges relating to data integration, automation, governance, and organizational change. This discussion will examine the current capabilities and limitations of AI within reconciliation processes, address misconceptions versus practical realities, and outline approaches for updating systems such as integrating legacy technologies, reskilling employees, and promoting internal support. Our objective to you is to provide practical insights and clear frameworks for developing resilient, future-ready operations and increasing speed, complexity, and accountability. However, before we begin, I'd like to formally introduce the distinguished panel assembled for this event, with whom it has been a privilege to collaborate and prepare. First, I want to start with Murray Campbell, Principal Product Manager with today's sponsor, AutoRek. Tell us a little bit about yourself, Murray.
Thanks, Carrie. So good afternoon, everyone. My name is Murray Campbell. I'm Principal Product Manager at AutoRek. You've obviously heard all about AutoRek now, thanks to the video at the start. I've been with the company for just over 4.5 years now. Remit that covers quite a wide range from marketing and sales support, client onboarding, solution designing, and also working closely with our engineers as we kind of shape our roadmap and continue to develop our product in line with technological advances, but also expectations from markets and from our customers. Before AutoRek, I worked for over 10 years across both compliance and reconciliation operational roles in investment businesses in the UK. So I've got a good, strong background in this space, and it's obviously what lends itself well to what we do at AutoRek.
Great, thank you, Murray. Frank Barnessi is the head of global operations at STP Investment Services. Why don't you tell us a little bit about you?
Thanks, Carrie. Good afternoon. My name is Frank Barnessi. I am the father of 2 beautiful daughters, which I'm required to state according to my 13-year-old. I run global operations here at STP Investment Services. We're a financial service company providing expertise and technology to middle office, fund admin, wealth, and managed services. I've been here for over 6 years now. I've been in the industry close to 30 years now, from front to back. So a lot of experience. I started my career doing reconciliations. Thanks, Carrie.
Great. Thank you. We're glad to have you. Don Pistola, Director of Olmstead. We'd love to hear more about you.
Oh, thank you, Carrie. Hi, everyone. My name is Dawn Pistola. I am not going to, like Frank did, divulge how many years I've been in this industry, but I am a director at Olmstead, which is a niche consulting firm here in Boston, where I've spent the past 4 years or so within our operational agility practice. That practice in particular focuses on helping our clients develop strategies to transform either a part or the entirety of their front to back operating models, whether that's through operating model redesign, technology replacement, or helping them make some outsourcing decisions. Prior to Olmstead, I've held various roles across back, middle, and front office functions, as well as spending some time at a fintech firm focused on building and accounting, data management, and performance product. I'm excited to be here today with all of you, and I look forward to our discussion. Thanks, Carrie.
Great, thank you, Don. And finally, last but not least, Philip Kolb, Head of Operations with Rockefeller Capital Management.
Hey, good morning or good afternoon, everybody. Certainly a pleasure to be here and be part of the NICSA community. I would tell you, I am probably the relic of the group. Honored to be with my fellow panelists, but I've been at this in the financial services industry now I'm just going into my 42nd year. So I've been at it for quite a long time. Spent almost 30 years, just shy of 30 years at Merrill Lynch, then Bank of America. Had an opportunity to work overseas. So I lived both in Singapore and in Zurich for a number of years. Worked for a Swiss bank called Julius Baer after Merrill Lynch sold its international business. Came back to the States and worked at Morgan Stanley for 5 years, where I also served on the executive board here at NICSA. And now for the last just shy of 4 years, I've been the head of operations at Rockefeller Capital Management. So been in operations for a bit. Topic is near and dear to me, and I'm sure we're going to have a great conversation. So.
Great. Thank you, Philip. And I'll just say that he also just celebrated a wedding this weekend. His daughter got married, so we got to hear a little bit about that. So congratulations again to the family, Philip.
Thanks so much.
Yeah, so we'll go ahead and begin with our initial segment, which is the evolving landscape of reconciliation. During each segment, there will be 3 segments. We'll have a polling question. So we'll go ahead and start with the first polling question, and you'll have about 60 seconds to respond to that. But my first question goes out to you, Frank. What changes have you seen in the reconciliation workflow and platform over your career?
Yeah, Carrie, it's funny. As I prepared for this question, I was reminded of the saying, you're the youngest person in the room for a very long time, and then all of a sudden you become the oldest person in the room. And this is exactly what happened, right? When I came out of college, it was, right before the .com, during the .com, I was expecting like this really cool, technologically advanced place where I was going to work. And the reality was, no, that is not what I was in. I showed up to work my first day, and I worked in reconciliations for Fund Admin Daily Nabs. And the way we did recon, most of the individuals on this call won't know what these are, but these green bar reports, which was a scroll of just paper, they printed out overnight. They were on the spindle and they would get jammed. Somebody had to be there pretty much through the night to make sure the paper came out. And then we had to wait for our custodians to deliver mail and postal mail, not email. And we would open them up and sit with a ruler and a highlighter and go through line by line, portfolio by portfolio. I can be honest, we made mistakes all the time. It was impossible. And if you found a break, you had to go call somebody and talk through it and be like, okay, my Apple position's here. What do you have? So lots of issues, lots of errors for sure. And over time, clients and custodians were able to deliver CSV files. We built proprietary systems. I'm sure everybody with any tech acumen gets it, right? If you give me Excel and some macros and Access, I can do some things. But those tools were good until the person that built them left. And once they left, somebody else would have to come in and build it because no one knew how they did it. And over time, that kept changing. And now we use vendors, right? And now the big thing is AI. So we're really excited about the opportunities here. And we'll see what comes over the next year or so.
Right. I've not personally had to do any of the reconciliation, but I have peers that can probably attest to the pain that you felt over the years with this. And thinking about that, obviously bringing on new technology and changes. Don, I think I'm going to ask you, what challenges are you seeing your clients face in the reconciliation space, and how are tools evolving to help solve for them?
Yeah, thanks, Carrie. And Frank, as I listen to you, I'm sure as some of us on this webinar can relate to, the manual nature of recon when we first started our career, and now sort of as a consultant and clients are coming to us to help them solve their challenges. I think I would sort of point to 2 probably main drivers behind some of those challenges. One being really the increase in the amount of data, transactions, positions, accounts that need to be reconciled on, any level of cadence. And that mixed with the complexity of some of the complexity of the transactions they're now entering into, such as private credit, those types of things where you're bringing public and private data together really challenges the legacy recon processes that have been custom built for these organizations, and really requiring a more, sophisticated and robust set of solutions. As we think about the data that's needed for private investments, they're creating challenges because they don't really follow the same path, if you will, as public securities, right? The data is often delayed. It's unstructured and non-standard. We're used to getting automated feeds. That does not exist in this world of private investments. And so that really makes the recon process far more manual and complex, and it's really more challenging for firms to be able to scale their legacy recon processes as their exposure to private investments increase. And then to layer on top of that, just the different layers of data that's needed to reconcile these private investment positions really adds the complexity to the process that these legacy recon tools weren't built to handle. So as we think about, what AI can do, and we use AI throughout our life, both in our, personal and our professional world, I think about features such as, being able to ingest these disparate PDFs, if you will, the ability to automate that ingestion and normalize that data for these recon tools. That's removing the need for manual rekeying of information, and clearly that reduces human error within that process. There's features and functions around being able to intelligently match and handle exceptions in a more automated way, as you train these algorithms or these things to identify patterns in the data. And that can really focus your human resources on exceptions that matter versus things that are just sort of smaller, insignificant. And then finally, from a root cause analysis, really being able to surface these reoccurring break patterns, and that can create some operational agility within the recon team. So you're addressing issues proactively versus just trying, fixing after the fact, which I'm sure we've all had some experience doing in our recon careers. So I say all of this, AI can certainly be a solution for all of these things, but I also don't want to sort of neglect the idea that there obviously is some complexity with implementing AI, and it's not just flipping a switch. So there's certainly issues like the quality of the underlying data that will still matter, and will just obviously needs to be considered when moving to a tool like this.
I think we would all agree with that. And a part of that is the retraining of the employees and getting them used to it. But you hit the nail on the head with that, and focusing on using the human for the stuff that really matters and getting the repetitive processes out and in front of AI to help create those efficiencies. And Phil, why don't you provide us, maybe from your perspective, a view beyond traditional reconciliation processes, focusing on the added complexities of data reconciliation, competing sources, and validating broad data ecosystems across our business?
Yeah, thanks, Carrie. I mean, it was interesting just listening to Frank. I mean, as we were even prepping for this, just thinking about the historical nature of where we all came from. When I first started, I mean, this is pre-Lotus, pre-Excel. You were dealing with green pieces of accounting paper. I had a adding machine that was probably the size of furniture that you guys all might have now, adding machine tape on the back of it. So just in my short lifetime, the advancements have been nothing short of spectacular. But with all of the things that we're talking about, and Dawn touched on it as well, as the products advance, and as I think about how my firm is situated, leveraging potentially multiple custodians, we're getting investment information from multiple sources. As we bring all of that in, obviously we've got to balance the books, right? You need to make sure that your books and records are clean. So in the traditional sense, you absolutely need to do that. But when you start to look at beyond the traditional, and you start to think about the amount of data that we have now, either on clients or products, and information that we're displaying to various constituents, could be the advisor, could be the client, could be regulatory reporting and things that we're responsible for doing. All of that is kind of mired in this massive collection of information. How do you store it? How do you make sure that it's right? And in all of the various places that you might display that, is it all right? Is it correct? So the challenges are complex, just as the products are getting complex. I mean, Dawn spent a good amount of time talking about the alternative investment space and the private investment space, where it's taking all of us probably back 25 years ago, when people were dealing with back then we were probably dealing with fax machines when people were sending you data, but it's not much advanced, right? Even though the products might be sophisticated, they're sending you information in the most rudimentary fashions, and they update it and change it kind of all the time. So being able to stay on top of that and keep your data ecosystem kind of in balance, not only from your security master to pricing to how you display it to all of your internal and external constituents, is something that you need to understand. And using vendors and using automated solutions, I know we'll probably get into some of the AI discussions in a bit, but it's impossible to do that in the ways that we used to do it, which were largely manual.
Thank you for that, Philip. And, when you think about some of the challenges that people still face, Murray, I think you can probably wrap this section up, the segment up in terms of, how can firms turn reconciliation challenges into a source of value for their operations?
Yeah, well, I mean, certainly listening to Dawn and to Phil, really covered articulately the range of challenges that firms do face, and there's such a broad range of those challenges around reconciliations, which really makes it quite a complex landscape for firms that can often be exacerbated by working in a manual environment, or perhaps there's part automation and still part reliance on manual processes. We've touched upon there the complexity of firms, and where you've got firms who are kind of a number of years old, have maybe gone through a series of mergers and acquisitions, and you're bringing firms together, you're bringing systems and data together. You're then left with how are legacy data systems and data sources going to be managed, and ultimately very often a lot of that results in operational teams in particular having manual workarounds just added on to their existing processes so they can continue to function on a daily basis. And really inevitably that is most felt across operations. And again, particularly in the reconciliation space, it's not uncommon where there's maybe been part automation that you have that manual workaround attached onto it to be able to get the process completed day on day. And I think really that the value starts to come for firms when they can instead start to take a bit of a holistic view across their processes and try to consolidate those processes together, understand what all the data sources they are that are needed within their reconciliations, and try to move away from those fragmented processes and look to ideally unify their reconciliations as much as possible across ideally a single platform. And rather than living with workarounds, because that's just how it's been done day over day, it starts to drive that great deal of value that firms can. So things like just the ability to really drive that increased control across your reconciliation processes. So you're moving away from spreadsheets, you're using a platform who will ingest your data sources, taking any kind of manual sourcing and manipulation of that data out of the hands of staff, and removing those manual setup processes that come with reconciliation processes, having all of that fully audited, fully permission controlled within a system really starts to bring value to an organization. Importantly, again, the removal of those manual steps then, of course, just starts to really drive the efficiency that you'll have within your process. And ultimately, again, with the controls and the checks that you're able to put in place in an automated solution, you can really start to create added trust in your data. So you can identify where you have issues in your data very early, and really start to have trust in the data because you've got the automated controls in place. And really that in turn then starts to really allow you to really maximize the value from the data that you're using in your reconciliations. So reconciliations are taken, we heard from Phil there, just a snippet of the data sources that they're working with, the data points that they're trying to make sure are complete and accurate. The reconciliation of that data shouldn't be the end of that process. It should be part of the journey for onwards reporting of that data. So having that data within a solution then really allows firms to make the most of that data. If it's then feeding into regulatory reporting returns, then brilliant. If that's just reporting across the various stakeholders you'll have in the business, then there's a lot of value there to have. And importantly, I suppose the final point I would make as well is just about having that confidence and the comfort that your processes will happily scale with you as your business continues to grow over the next couple of years. So that's really where you start to see the value, that you don't have concerns about how your processes will handle your increasing volumes and so on. It's just having that comfort, knowing that they will scale as your business hits the growth targets that you inevitably have.
Great, thank you, Murray. And I think that really comes full circle to some of the concerns that Frank mentioned at the beginning of this segment in regards to where we started with reconciliation so many years ago, and to where we're going now with being able to leverage automation to help with data reconciliation. That brings us to the end of our first segment, and we want to go ahead and move on to segment 2 and start talking about, how we can leverage AI and automation and our second. And then Natasha, if you'll put up our second polling question, we'll give the participants about 60 seconds to review that. But we'll go ahead and come back to you, Murray. Where do you see the introduction of AI having a real impact on reconciliation performance?
Thanks, Carrie. So we've obviously already touched upon the impact and the huge change that automation has brought for how reconciliations are performed. We've moved on from those highly manual processes, from Frank sitting with his highlighter pens and making all the mistakes that he was making on a daily basis, now to having fully automated end-to-end financial control processes. But now, with the developments in AI and machine learning, we really have now the next opportunity to take automated reconciliation tools to the next level. So it's really about looking at current tooling and current processes to see where, even within an automated reconciliation, where is there still gaps, or where is there still inefficiencies, and can we use AI or machine learning, for example, to help address some of those challenges. I think it's an important note to make around that it's really about making sure that we can give staff within operations the best tools to perform their job. And I think that's particularly important in operations where, historically it's been probably underinvested and heavily manual. So this is really about giving staff the best tools and the best skills to really help kind of drive value and add value across their role. At AutoRek, the approach we are taking is really trying to be very specific in our approach to where we're using AI and machine learning in our product. That's really structured and centered around quite a specific set of user personas. They all then fall under the banner of our overall online intelligent agent. So we're thinking quite specifically in terms of the roles of users who are engaging with the product, and thinking about the tasks that they perform, and considering where do they still potentially have manual input or kind of tasks that could be supported or added to further. So we think about the reconciler. Don mentioned it, but we obviously have automated matching rules which match the majority of transactions, but we then still have that manual review and investigation process that sits outside that, which is where the majority of your resource takes up. So we're now looking at, or we've introduced analytics to be able to learn from the manual matches that staff have carried out previously, build relationships from those manual matches, and then use that information to suggest matches in the current data set that's held within the platform. We then also have the use of data models, and using those models within the platform to predict labeling or categorization to apply against transactions as they are then loaded into the system. So that again is just helping to immediately categorize those breaks and those exceptions. So again, just considering the overall exception management process within the product. Another area that I'll touch on just quickly, and it's kind of helping users more broadly, is the ability to now engage with the intelligent agent and ask questions in natural language, either about the status of a reconciliation process, so engaging with workflows or scheduled jobs to find out the latest status of processes, but also being able to ask questions specific about the product and about configuration. The intelligent agent can then access help documentation, support articles, and provide a summarized response back to the user. So various different ways of being able to help a user's engagement with the product. Again, as I said, it's really about trying to be quite specific and tailored in where we're using AI, rather than thinking it's just a big bang approach and AI is going to fix everything. It's really delivering quite specific features to enhance what's already there from the automated tool. So definitely a lot of excitement and a lot of capability there to take it on to the next level.
Great, thank you, Murray, for that overview. And in thinking about that in our pollers, you're looking at a large percentage of those that responded are interested but have not yet adopted it yet, or are in the pilot and testing phase of it. I know that's something that we take very much to heart at American Century as well. We have an AI governance working group that I'm a part of, and we meet on a weekly basis to discuss any potential vendors coming in that may have that AI technology, just from an integration and governance standpoint. But Don, I'd like to get your insight. What are the biggest sources of resistance to adopting AI and automation, and how can firms overcome them to realize the full value of these technologies?
Yeah, thanks, Carrie. I think change is hard, whether it's AI, tool replacement, role changes. Change is hard and can be scary. But I think of sort of three different areas around resistance to change. And Phil touched on it. I think Murray touched on it in his point too. As we think about these legacy reconciliation systems that have been built over years, decades, and the amount of customization that has been put into these legacy applications because they were meant to be solving a problem at that point in time. And just over time, the complexity of that, can get, out of hand. Those custom rules and workarounds, can be very difficult to unwind. And so when a firm is thinking about replacing a legacy application like Recon, or any application for that matter, they really can be challenged with trying to map those data flows to a new application that might not easily map to. So one, I would say the complexity of the current Recon system could definitely be a resistor. Second, and I think more naturally, there's organizational resistance to change, especially as we think about longer tenured folks who've been with the organization, who have deep knowledge of the institution, of the custom processes, and most likely even had sort of an impact on building those processes, whether it's through macros or what have you. Those types of things can be very self-serving around building custom processes. And for them, the change can especially feel like a threat, because you're not just sort of replacing systems that they've built, but you're really, to them, you're impacting what their own, what their role might be, and, what their expertise might be. And that creates a natural resistance. And the third part I would point to, and you mentioned it at the opening of this segment, Carrie, is really around this risk perception perspective. And that is about firms worrying about oversharing sensitive data. I'm sure we all take training multiple times a year around what information can and can't be shared. Or on the other hand, removing too much human judgment from a control process, which is what, Recon obviously is a control process. And by removing too much of that judgment, what are you doing to that control? And as you mentioned, the framework or the governance that you have in place at American Century, that is what, I would debate is a good working model, right? Having that governance framework before implementation is important, because as an organization, you can treat it like a risk assessment. You can evaluate how the AI will handle the data. So you can dictate that. You can make decisions about what AI can or cannot do from an oversight perspective. And maybe the cannot do might be the more important part. And so structuring that ahead. So as we think about AI and bringing this all together, the organizational resistance, the risk perception. So I would say sort of that to mitigate the resistance, you need to have the framework in place, and you need to have folks on the project, the implementation project, the planning, et cetera, that really have sort of a transformation mindset. Because I think the more you can build trust into the application that you're migrating to is super important. But making sure that you're bringing the folks along on the journey and demonstrating to them that this new tool isn't really a replacement, but more as an enrichment, and what I've sort of call sort of as a coworker. AI is there to enrich your job, to do things that can be done more manually, and leaving you more focused on the higher value add tasks.
I love that, and I love your 3 points there: the legacy, customization, organizational resistance, which is so true. Because at the end of the day, they take it personal. Well, what about my job if AI takes over? I think we'll get into some of that as well. And then the risk perception. And in thinking about that, Frank, how and why do your clients interact? How do and why do your clients interact with that reconciliation data?
It's interesting. Historically, clients did not interact with reconciliation data. And one was because it was manual, it's in, spreadsheets, it's in proprietary tools. But with the new technology, and honestly, the amount of data that we're crunching through, I've always told clients the reason you outsource to me is one, for scale, one, for cost, but most importantly, it's right, they're transferring risk to me. So if we have a reconciliation issue and they trade on that, now it's my issue. But I've also been in the front office, and one of the things that I've outsourced, one thing that I do not outsource is ownership of the data. So I always tell my clients, yes, I own it. I will do the best of the best. We'll give you access, anything you need. I'll pass my SOC 1 audit. You still own the data at the end of the day. And how do you interact with it? That's where technology and AI and these tools make such a difference, because before it was thousands and thousands of lines of data, either through a web portal or anything. And now what we're able to do is narrow down the risk profile of what they're looking at, right? So my clients are wanting to know that, was the reconciliation completed before they begin their trading? Of course, that's my SLA to do that. Do they have breaks in specific assets? Why do they have breaks? What are the trends are they seeing? Do they have an issue with specific brokers? Do they have an OMS issue? All that data now is available in multiple ways, right? I think we have, AutoRek has great dashboards. We have a dashboard at STP where clients can log in and create reporting that gets delivered to them whenever they need it to, in Excel or PDFs. So it allows them to, one, be comfortable with what my team does for them each morning. It allows them to have confidence in the data itself. And at the end of the day, it allows them to show to their internal audit shops, right, to people in their risk committees, that they continue to have ownership of the data. They didn't just outsource kind of the ownership as well as kind of the service.
Great, thank you. That's a good thing. Good to keep that in mind as well, because the data can tell a lot of different stories and not just the reconciliation story. So rounding out this segment, Phil, describe some key objectives, use cases, and deployment strategies for AI technologies, including opportunities for straight-through processing and value-added services.
Yeah, and I think, most everybody that's touched on it, I want to echo a little bit, and it's not easy to think this way, but AI clearly will be more of an enabler than what everybody's worried about being kind of an eliminator of jobs, right? And it's going to be those folks that embrace it that really kind of make the difference, right? This is probably going to be the game changer of maybe collectively our lifetime. We happen to, before I get into just a couple of quick notes, we had the pleasure of having an MIT professor come and speak to our management committee probably about 6 weeks ago or so, and he had a pretty broad deck that he could have picked any spots in the deck to talk about different aspects of it. But the one thing that was unbelievably telling is he had kind of a timeline of the last, let's call it 250 years, and impact of certain innovations, steam engine, automobile, the internet, personal computer, phones, right? And all of those kind of made a nice dent. Like, you know, you're moving along, and then all of a sudden in comes this innovation and up it moves. And then in comes this innovation, up it moves. The way that they're depicting AI, it was off the page, straight up. So it was not kind of a little speed bump on some of the big things that I just mentioned. It was, you know, exponential off the page. So it's really how we're going to embrace it that's going to make all the difference. Well, some of the things that we've been doing inside, and quite frankly, that conversation sparked our CEO and many of the leadership team into action. And we've been very focused on trying to use AI throughout the organization, right? Kind of breaking down that resistance that Dawn talked about, which is palatable. Getting everybody kind of engaged in something that maybe is not what they normally would do. We've talked about it through each of the organizations, having people that are connected to folks in our technology group that are proficient. We're a heavy Microsoft shop, so using Copilot is now, we're tracking how many people are using it, how they're using it, using Studio and creating agents, and using Researcher is now becoming ingrained in how everybody thinks about this. So, I think Dawn or maybe Carrie mentioned at the top that my daughter just got married. I tried to use Copilot to come up with a song that we would dance with or dance to. So they did a great job. I told them a few little tidbits, and it gave a great, great lyrics, but said we're not quite there on the melodies yet. But you know, I'm stretching out of my 42-year box to think about creative ways to use it. We're definitely thinking about it in anything from the new account space, where we're creating much more straight through processing, trying to, whether it's optical recognition, kind of putting automation features together with the AI is really where we see kind of the difference makers. So, the one thing that I would just say to everybody who's out there, move towards the light, right? Embrace the technology and use it, even if it's uncomfortable to do it, because it will become a natural component of our jobs.
Yes, totally agree with that, Phil. Thank you so much for your insight there and good advice. Move towards the light. We can all do that. We're moving into our last segment, strategic vendor selection and operational excellence, and our last polling question. So Don, I'm going to start with you as we round out this segment today. When evaluating reconciliation technology vendors, what factors should a firm prioritize beyond core functionality?
Yeah, I think it's natural, Carrie, for firms to start with core functionality, really trying to understand what the product offers today and how that fits within their current state. At Olmstead, we have a best practice around, evaluating vendors for our clients, and that would suggest that, there's a couple other areas to consider. First, I would say, non-functional requirements and stress testing are just as important as core requirements and often sometimes get put to the side. At Olmstead, we recommend to our clients that we ensure or try to test the system ahead of time. So can the system handle your peak volumes, not just current state, but also your projected volumes? How well does it integrate with your upstream and downstream systems, whatever your plan is for integration, and can it deliver and handle volume at scale? We've seen some of our clients come to us because their recon tools are on their back because it can't handle the volume of data as we talked about earlier, and that's the need driving them to a new tool. So volume and stress testing, I think, is important to do during the evaluation phase. Second, I would say business transparency and KPIs on both sides of the fence. So firms, we recommend our clients to share as much as they're comfortable with around key business stats. How many accounts do you have? How many positions and transactions, et cetera, and factor in some level of growth. And that really allows the vendor to understand what your current and your future state would look like so that they can better tailor their response if you're doing an RFP as an example. And in some cases, we've seen on some of our projects, surprisingly, that vendors will self-eliminate because they recognize that their application is just not a fit at that point. And that clearly saves time during the evaluation. At the same time, I think it's critical for the vendor to prove the product that's being evaluated. And by that, I mean, do they have clients in production on their application that are of similar size, volume, with comparable business goals? And if they do, great, that sort of can build confidence that that might be the right product for you. And in other cases, it also might accelerate the elimination of that product as a fit. And then two other quick points. I know we're very talkative today, very chatty group today, which is good, but just two more quick points. One is look at the roadmap. Make sure that it's aligned with where your firm is going. And just as important, how does that vendor factor in client feedback into the roadmap? That'll tell a lot about how they'll partner with you if you decide to move forward with them. And then finally, which also I think doesn't get enough sort of airtime, is a cultural fit. You know, you're not just buying software here, you're entering into a long-term partnership. You know, and is that a vendor that you can collaborate with? And do they understand your business and operating model and share sort of your future looking goals? So I would say really, just to sum it up real quick, it's not necessarily just looking at what the tool does today, but it's really about how that vendor fits with your organization and can it evolve with you and as your business continues to evolve into the future. That's really what makes it a strategic partnership.
That's very helpful. Thank you so much, Dawn. And in thinking about what we're able to glean from reconciliation data, can you tell us, Frank, some stories that you're able to glean from that?
Well, I think of reconciliation as going to your doctor. It's your health check, it's your physical, and it's a daily physical. It's telling me how great my security masters are or are not. It's telling me how great my data vendors are on providing me corporate action details, or my OMSs are. So we look at our breaks and we look at trends over periods of time to understand where we are really good and where, more importantly, where we need to build better expertise. We've recently gone through and worked with a number of our clients because of their OMSs having different fee structures set up versus what's being communicated to the brokers. Just little bits of noise throughout the day. But when you look at a trend, all of a sudden we're spending a lot of time working with the client's brokers, and the brokers are getting frustrated saying like, listen, I'm getting this trade. It's supposed to be this way. Why am I off 3 cents, right? It's 3 cents. It doesn't matter in a point in time, but every single day it does. So one of the big things with reconciliation is trends, not point in time, and making sure you have a tool and a vendor that gives you that ability to see that and then take action, right? My big thing is, okay, great that you're sending me metrics. What's it mean? What are the three that I want to look at? What are the three that my client wants to look at? What's your key metric here? And what are you going to do about it? So reconciliation is my health check on almost every kind of shared service that we're doing, and gives us a roadmap on how to either get better or to reward, right? Where are we doing so good that I should go to my security master team and say the controls you've created have eliminated tax withholding issues that we've seen. So ton of data, important to have the right vendor.
All right,
Thanks,
thank you, Frank. And Phil, question to you. I know we've talked a bit, and Dawn just addressed some of the things in regards to vendor selection, consideration, and integration and governance. But can you directly address challenges such as buy versus build as it comes to legacy technologies and product evolution?
Sure. I thought both Dawn and Frank did a really great job at some of the things that they highlighted. And, you know, kind of right in the mix there is going to be, and I experienced it, you know, over these number of years kind of firsthand, when you're with some of these older firms, you've got legacy technology that probably dates back to the 70s in many cases, and you're bolting things on over time. So when you get to the point of, hey, I want to outsource, or I want to bring in, you know, some type of vendor package, you really need to make sure that you evaluate kind of what it is that you need, why do you need it, and how is it going to fit within your environment. Many times because of those legacy technologies, the integration is much more difficult. Many times the buy versus build strategy comes down to financials, you know, what you might be able to capitalize in your budget versus, you know, not be able to capitalize it if it's pure vendor spend. All of those factors will go into kind of your decision to what it is you're going to do. And then as you're trying to make your selection of, is this the right vendor? Is this the right package? I have to just, I just have to say it, you know, that is the most critical thing. You know, Dawn touched on compatibility, not only from whether it's the technology or the services that they provide, but are they going to be a cultural fit with your company? I mean, so many of these companies have been kind of blended together, and sometimes the cultural fit it doesn't work. I've seen so many outsourced arrangements not work because of various aspects that maybe weren't considered in the upfront. So you've got to have a good RFP process. You got to make sure you're including enough folks to look at, that you're not tunnel vision on one particular vendor that somebody might have recommended that worked with them in the past. That might have been great for them, may not be good for you. Your diligence is paramount. You know, how much do you want to take that down to? You know, Dawn touched on volume spikes and things like that. You got to make sure you're looking at, you know, kind of a holistic picture. And then, you know, you want to involve other people. You want to involve legal, so that you've got a contract that's going to work for both firms, and you're not going to be into disputes over that. So it's kind of an end-to-end process. Decide what it is you want. Make sure you go and look at as many people as you can to find out, you know, who's the best fit for you. Do the right level of diligence, and then you know, and bring your vendor in as a partner. And then once they're here, once they're in your shop, you've got to make sure that you've got the right level of governance, right? We do, you know, here at Rockefeller, I'm sure many of the folks on the call and certainly the panelists, we do, you know, quarterly, you know, vendor reviews. We set them up as in a tiering model. A tier 1 vendor is critical to our daily outcome. We're doing, you know, critical reviews on the relationship, the services. You know, do we need, does something get put on the watch list because they're not performing? They've been down a few days during the quarter, whatever that might be. And then, you know, make sure that you've got the right focus on the ongoing relationship manager of that vendor, so that you're on pace with what they're developing. You can integrate it with you know what they're doing. They know what you're doing. You want to build that, you know, from a vendor-client relationship into more trusted partner.
Great. Thank you, Philip. And this has been such interesting information, and all of the panelists had such valuable information to share. We want to just open it up prior to us coming to the end of this hour. It seemed to have gone really fast. But do we have any Q&As, any questions that you would like to ask the panelists before we wrap up our session? I did receive one question ahead of time. Murray, if you would not mind answering this one, what are the biggest risks posed by reconciliation processes that remain manual?
Yes, I mean, we've discussed already a lot of the challenges around manual processes. And I think for me, just to reiterate and summarize those points, the biggest risk, I think, for continuing with manual reconciliations is is will you be able to continue performing these key financial control processes over time? So are you going to be able to handle increases in volume? So for example, earlier this year, we carried out a survey of asset management firms in the US, and across the board, they predicted on average increase of around 39% in transactional volumes over the next 2 years. So if that was the case and that comes to fruition, while your processes, if they're manual, they might be able to cope today, will they be able to in the next 2 years if volumes increase that much? And also similarly, there's a lot of external factors to a firm which they can't control, which will also have an impact. So things, for example, T+1, that was obviously an industry change and placed a significant demand on firms to do more in a shorter period of time. So changes of that nature place significant demands on firms as well. So I think that, coupled with all of the challenges that are well known and well documented around manual processes and spreadsheets, presents a real risk for firms to be able to continue completing these processes over the coming years.
Great, thank you. And we do have another question from the audience. And Dawn, I'm going to send this one to you. Can you provide some other specific use cases that you see for AI, whether recon related or otherwise?
Yeah, one other one I would mention, and Murray, you may have mentioned this, but chatbots embedded in applications, I think, can be really helpful and very much self-service, if you will. So being able to leverage, whether it's wikis or other procedures and things sort of at your fingertips, I think will be a huge enabler to making or to building operational agility within the workflows. I would say that's probably a good example of another use case. And I'm seeing that in recon tools as well as other tools as well. I mean, that's popping up everywhere.
Oh, absolutely.
If I could add one more to that I didn't cover earlier, is maybe
ahead.
just around the ability to use kind of agents within products to help configure solutions as well. So if agents within products have access to internal APIs within systems, then they can be used to start developing and configuring solutions as well. So another area that I think AI will be able to help as well, for sure.
Okay, great. And Frank, just send one last question out to you. If you could quickly answer, just high level, what new skills do reconciliation teams need to develop to effectively work with AI-powered systems?
I think somebody said earlier, we have to lean in, right? I think the skill set going from matching, which means I call it the memory game, right? We're pushing things together and moving along and then stepping away to thinking about things differently. Why am I doing this? Is there a better way to do this? Using these chatbots, I've seen it where you're like, can I do it this way, or what's available? It's more of a mental shift in what the role is versus an exact skill set, because I've learned it, which means I'm pretty sure most people can learn some of these AI tools.
Thank you. And we're near on time, so I want to sincerely say my appreciation to our distinguished panel for their valuable insights, as well as all the attendees for their engagement and participation. And at this point, I'm going to return the floor to Natasha for her closing remarks.
Yes, special thank you to our speakers for sharing your valuable perspectives today. Also, a special thank you to AutoRek for sponsoring today's program, and to our listeners for joining today's webinar. A recording of this webinar will be made available on the NICSA website in the upcoming days. And on behalf of NICSA, I'd like to thank you for joining us, and we'll see you on the next webinar Wednesday. This concludes today's session, and you may now disconnect.